Hi, I'm Kerry Artek, Chief Analyst for Wicked Stocks. So you've probably heard by now that we're going to a paid format for our regular series of daily and weekly YouTube videos, including the Daily SPY Report, the Daily Triple Cube Report, the weekly DIA, IWM, and Bitcoin Report. And so whether you've been watching our videos for the last few days or the last few months, you know that our work is unique and that does provide a distinct sense of market flow and timing. Whether you're a day trader or a longer-term position trader or an investor, you know that we cover all the time frames in all the videos that we do. I've been a market analyst for over 30 years, and I started my own commodity trading advisory off the Chicago Board of Trade in 1996, and I've catered to floor traders, day traders, institutional trading firms like hedge funds and brokerage firms, and large-scale commodity producers throughout the United States. I'm skilled in the art and science of technical analysis, and I know that you're continuing to follow my work on wickedstocks.com will assist you in staying on the right side of the market. We're offering half off your first month. Just go to wickedstocks.com, click on the premium membership link. It'll take you to a landing page that'll have a coupon link. Fill out the word half off, and we'll provide you 50% off your first month subscription. That's $12.50. That's the cost of a movie or a McDonald's meal. And I have to ask you, is that worth the cost in significantly enhancing your personal portfolio's profitability? You can cancel your subscription at any time, but I'm confident that over time, as our work continues to assist you in sharpening your sense of directional market flow and timing, you'll stick around for the long haul. Go to wickedstocks.com and fill out that premium membership form. You won't regret it. Hi, this is Kerry Artek with Wicked Stocks, bringing you Treasury market, interest rate market analysis for the week of Monday, March 7th, 2022. This is sort of a one-up only right now. This doesn't really give you rate of change of any of the line studies going forward. It's just sort of a snapshot in the here and now for both the TLT, which is the higher volume, longer term Treasury market ETF, obviously inverse correlation for the most part with the interest rate market longer term. The TLT is kind of a 20-year maturity roughly. And I'm also looking at the US 10-year US Treasury market as well. You've got basically with the U.S. Treasuries and the futures especially, you've got 10-year and you've got 30-year. And so I'd go with the 10-year. It's a little higher volume. It's a little nearer term than the 20-year maturity of the TLT. But I think they're both roughly telling the same story. And so I'm going to start with the Treasuries themselves. And by the way, this is a weekly chart of the 10-year U.S. Treasury futures. Actually, it's going to look identical to the Treasury cash market chart. But this goes back some 30 years. And I just also wanted to emphasize before I jump into this that I'm only doing this for the week. You know, I'm not giving you rate of change of any of the line studies. They should be pretty good for a little while anyway. But I'm saying that if you see any of these markets approaching any of these meaningful support and resistance levels longer term, the big picture ones, and because I can take my eye off them, I do glance at them, but I sometimes forget the analysis that I may have put out a week, 2 or 3 earlier. And if we're approaching any of them and you like an update, I'll have a look-see to see if that's necessary or not. But bottom line is, don't be afraid, don't hesitate to shoot me an email if you think you'd like to see an update on any of this analysis, because I'm not putting it out on a regular, say, weekly basis. Anyway, 10-year U.S. Treasury futures, weekly chart. You can see coming off that high in March of 20. We're 2 years into that sell-off off that high. We closed last Friday at 128.17. We've come off the lows over the last few weeks, which is a sort of an easing of interest rates actually over the last couple of weeks. And in fact, there is, as far as I'm concerned, with regard to the 10-year, we will enter what I would consider to be a long-term trend in climbing interest rates and inflationary concerns if we actually take out that 119.17 channel bottom. And we're a distance away from it. So, it's a little irrelevant right now, but I just wanted to put out that I'm personally not concerned about the interest rate market and what it may do to the economy or in terms of paying interest rates on long-term mortgages. what it may do to the stock market, so forth and so on. I don't see a protracted downward trend that will last years, the better part of a decade, let's say, unless we close below that 119.17 channel bottom. Until then, I think it could contain longer term lows. If we were to test it this year, and we may, if we were, it could contain selling through next year, possibly into later decade. I mean, we could trade inside. That is actually a 10-year structure. If you go back to that first high, that's 2012. And the second high is 2020, 8 years later. So this is a long-term channel structure. I think that 119 handle is a base of long-term support that could conceivably contain selling through the rest of the decade. So there's that. It's also roughly about 7% below present price levels. So from that 128.17, I'm not talking interest rates. I'm just talking the distance from present price levels down to long-term support at 119.17 is about another 7% down. And so the reason I'm drawing that comparison is because that's the last I'm going to look at the 10-year. We're talking about the TLT now, which is the iShares 20-year plus Treasury bond ETF. And this is a long-term chart. It doesn't go back to 92, but it does go back to 2007. And it closed at 140.24 last Friday. It has a long-term channel bottom. It's actually longer term than the one in the U.S. Treasuries. It's a different channel structure. It goes back to the financial crisis of 2008. But it also has a significant long-term support this week at 128.79. I can tell you it'll be in the 128 handle for weeks to come, and it is about 8% from present price levels. So, there's sort of a symmetry there between the 10-year Treasuries and the TLT, in that both can drop about 7 or 8% over the weeks, months ahead, and still find long-term support that could contain not only annual, but possibly decade-long lows. So once again, the TLT is saying no protracted long-term interest rate rises. How do I say this? Protracted upside pressure in interest rates or downside continued pressure in the TLT unless we were to close below 128.79 at the end of any week. And we're a long way from that right now. So I think the comparison between the 20-year Treasury bond ETF and the 10-year futures is quite similar and I think valid. And so we're going to sort of zoom in here. Actually, I'm not going to zoom in before I show you the simple trend line coming off these lows. I don't know if you can see it or not, but there's a very rough head and shoulders top. I don't read into head and shoulders formations as a predictive sign of a long-term high until or unless we were to close below the neckline, that 132.28. And what I'm saying here is I'm really just saying that there's also decent support at 132.28, and that narrowing area, that line off those lows and that long-term channel bottom all converge in September of this year. So there's a lot going on down there for bottom picking, and I just don't think the sky is falling, so to speak, with regard to the interest rate markets unless we were to close below that range and certainly below 128.79. So now let's zoom in. We're going to take a look at this area here, open the chart up a bit. You can see that trend line off the lows at 132.28, the long-term channel bottom that goes back to the 2008 high at 128.79. So that's there for reference. And I'll just have you know that last week, the rally in this market, the easing back of interest rates, did set off a couple of meaningful buy signals. One was just the high of the low at 138.37. That extreme descending channel top was 138.40. I'm rounding it out at 138.37. I think this is decent support for the week. I think this is telling us the market, the TLT, has put out a good low that may well last well into Q2. From here, there's reason to consider the possibility of 155.51. And I say this also just with regard to what's going on in the crude oil market, what may play out in the stock market. We haven't violated long-term support yet, really, in the triple Q or the SPY, the NASDAQ 100 or the S&P 500. I would invite you to watch those markets if you subscribe to them, wickedstocks.com. I forgot this is going to YouTube. So if you are interested in daily SPY analysis, daily triple Q analysis, weekly DIA, IWM, or Bitcoin analysis, and a series of weekly stock picks. I invite you to become a wickedstocks.com member. If you already are, please forgive that brief commercial. 138.37, decent support for the week, and above which I think over the next few months, this market can claw its way back into the mid 150s, that 155.51 channel top, potentially in reach over the next few months. This after last week's sort of reversal. Now, it needs to stick. I would like to see a higher settlement on this week. This is a weekly chart. So closing Friday above 140.24 maintains the sort of pull away dynamic. On the way up, I'll just have you know, there is a former channel bottom this week at 144.11. I'm just throwing this out there for those of you who actually trade the TLT. This is an area that if you did go long last week based on this recent activity, that 144.11 is a bit of a trouble spot. We could top out there for a week, two, maybe three, fall back into the upper 130s perhaps over the following week, 2 or 3. Closing, though, above 144.11 is certainly, I think, in the cards right now. And if that happens this Friday, then I think within just another, I don't know, as quickly as 3 to 5 weeks perhaps, it could take a couple of months before we reach that 155.51 formation where we can top out on a quarterly basis and then fall off from there. So I'm going to also mention that if we do fail to follow through to the upside this week, and if we do close back below 138.37, I don't see that as a significant sell signal, but I do see that, if you did buy the TLT based on recent price activity to the upside, or if you're buying it this week at 138.37, if we close below 138.37, I think that's sign enough to get out, because I think then this market can continue south into the 128.79 level area, which is once again preceded by that 132.28 longer term trend line. So we could, if we close back below 138.37, and I think the risk is certainly there that we would continue easing back by the end of April or sooner into the 128.79 to 132.28 area. I'm going to leave you with this image. I think this pretty much gives us sort of the basic. We are not below long-term support. That is 128.79, the threshold we would need to close below before there is a real long-term threat for an ever-increasing interest rate market or inflation. Same thing, really. But that's not happening. We've got a near-term buy signal that may continue to unfold over the next few months into the mid 150s. And I think I'm just going to leave it at that. Thanks for watching. Please click like. Please click subscribe on every Wicked Stocks video that you happen to see, and become a member. You'll be apprised of any new video that comes out on YouTube once it's put out. And I think I'll just leave it at that. Become a wickedstocks.com member. That's what the last thing I'll say. Go to wickedstocks.com and consider becoming a premium member. If you type in half off on the coupon code, you do get half off your first month. You'll be able to see the Daily SPY, Daily Triple Q, Weekly DIA, IWM, Bitcoin, and several individual stock picks a week. You have a great week. We will talk soon.